KVB PRIME, developed for global traders, growing together with you.
Good evening and welcome to KVB Prime Weekly Market Commentary. This week's topic is why does USD remain strong during economic uncertainty? USD continued to appreciate last week. The total appreciation was total to 0.52%, closing on 100.24. Previously, the Fed announced multiple stimulus package and many central banks around the globe enhanced quantitative easing plans, resulting in USDX falling below 99. Early last week, WTI contract prices plunged to negative, which triggered risk-averse investors to purchase USD for hedging. Large amounts of cash flow was withdrawn from other currencies and assets, resulting in high demand of USD, which then resulted in appreciation. On Friday, USDX climbed to 100.87, which recorded a two-week record high. Although oil supplies has considered further oil reduction, however, due to the declining demand as a result of the pandemic, oil prices remained low. Meanwhile, European Union is gridlocked over $1 trillion pound fund as member countries holding disagreement on some key points. Hence, investors may have more confidence in US economy recovery than the European Union, which contributed to USD appreciation. In the short term, US dollar is likely to remain strong and continue to appreciate as the global economy remaining uncertainty. However, in the long run, trillions of stimulus package will become heavy burden on the trade balance. USD may become weaker while other countries' economy recover. Next, let's look at weekly asset movements. This week's highlight is USDX appreciated 0.52%, Euro fell 0.45%, British Pound fell 1.07%, AUD appreciated 0.47%, gold increased 2.74%, WTI fell 56.16%, Dow and SP 500 fell 0.23% and 1.4% respectively. Next, let's look at weekly asset analysis. First up, we have USDX. Over the past 3 weeks, USDX has been adjusting itself. After falling from the upper resistance 103, USD stayed within the resistance support boundary of 103 and 98.3. The market trend was similar comparing to last week, no clear opportunities. Thus, the strategy for this week is to monitor the possibility of shattering the two benchmarks. As we mentioned in the last report, USD is still highly demanded and continues to perform strong. If the key support 98.3 remains, the overall ascending channel will not change. Notably, the boundaries are getting narrower, which suggests the possibility of market change. USDX has completed its midterm uptrend for the past 2 years, recently adjusting itself from 103 to 98.3, accumulating strength for the next opportunity to challenge its resistance. The key for next week is the possibility of breaking the first level of resistance 103. Once it is opened, USDX will also open up further potentials for appreciation. When this is the case, USDX records a new record high, there will be no short-term benchmarks in stopping USDX. In simple terms, upper resistance will reduce. Now let's look at Euro. Similarly, there are no significant change in trading strategies for Euro. The short-term prices remain in unknown zone. The fluctuating movement will extend to this week between the resistance 1.1150 and the support 1.0760. Similar to USD, the price boundaries are also narrowing. The support from last week, 1.0760, have performed strong. Thus, the support will continue to help us determine the market trend for this week. Overall, Euro is still experiencing a descending channel over the past 2 years. The trend line in the graph below indicates that an opportunity for short rise when the market opens the support point. For short term, it is unlikely to have huge changes until it breaks the upper resistance 1.1150. Therefore, shorting at a highest point may be an appropriate strategy at this point. Especially when it breaks the support 1.0760, Euro is likely to further depreciate. British Pound. Pound depreciated under the pressure from the upper resistance 1.2650. Last week's report we mentioned that if Pound falls below the support 1.2450, it will decline further to 1.2160. Sellers' attention shifts to if the target 1.2160 could be reached. Overall, if the price breaks the boundary of 1.2450 and 1.2160, traders can enter the market. And as mentioned last week, although pound experienced a V-shaped rebound, however, it is obstructed heavily by the upper resistance and remain downtrend. Hence, traders should consider carefully with long position unless pound go beyond 1.2650. Now we have gold. Soon after gold prices reached the 7-year highest of 1,747, it cooled down, then rallied, completing a V-shaped recovery. This week, traders should monitor both the upper resistance 17337 and the lower support 1702.5, since the revised support 1662 from last Monday and Tuesday gave a great reference point for long trader. If the market is continued dominated by long traders, the gold prices may increase to 1,754.5 or another record high. Lastly, we have crude oil. Last week, crude oil crashed to record low, but it quickly rebounded. From the 4-hour graph, it shows that crude oil prices have been struggling in between the resistance 21.2 and the support 16.8, under the pressure of the fast downtrend. Further, if the price remains below 23.4, it will be adjusting within the boundary. However, if it jumps above 23.4, then the price may be recovered for the long term. At this stage, the resistance effect from 21.2 and 23.4 seems to be strong. Therefore, traders should monitor the possibility of breaking other resistance points for trading strategies. That's it for KVB Prime Weekly Market Analysis this week, and we'll see you next week.